And welcome to another edition of Your Money Radio. Danny Stewart, Hunter Mazingo, Don Vandenborg with you. We got a lot to talk about, StockNerds market lovers, and I want to dive right in. I want to talk about extensions. I want to talk about Bitcoin. I want to talk about algos. I want to talk about hedging and the divorce maker. It's not the widow. Well, maybe it is the widow maker, Don, but it's really a divorce maker. UVXY, as they say, Don. You ain't got no alibi. You ugly. You ugly. You ugly. That's from Wildcats, Goldie Hawn, 1985. Speaking of movies, Daniel. Daniel, are you with me?
I'm there. I'm here.
Sorry, I didn't know if you were head first into a bucket of that crispy golden fried chicken that you might hawk on TV occasionally.
Actually, I don't know.
The Colonel. Coronel Dan.
I like it. There we go.
Colonel
It's
Dan.
finger licking good. It's finger licking good.
It's like Lieutenant Dan got promoted to Colonel Dan in this match.
Wow.
Lieutenant.
You ain't got no
Those are
legs,
both great.
Dan. You like that one, Tim?
It's just not fair to Danny, man. He's not. He's got nothing to come back with. He's a good sport. Danny's a good sport. He takes the brunt of the jokes. He breaks us in because it could be tense. I mean, this is a tense week.
It's actually pretty funny, I thought.
In America, there you go.
The
Hey,
voice.
Danny,
We need to have Don do what do you call it? Not imitations. What are they called?
they're actually called
Impersonation.
imitations. Yeah, they actually.
You didn't know you were dressing in your Crimson Tide outfit today,
I
did you,
did
Dan?
this in honor of Hunter.
Well,
Look.
did it too.
I thought you were
We
dressing
were
like
on the
a
same
bottle of
wavelength.
Ocean Spray cranberry juice, getting ready to work in the bog.
They ought to just make Alabama go pro. And
I would like to see Alabama play a pro team. I'd like to see
The
that. And see
Jags.
Shut up.
I might bet on to the Alabama.
how much money. You know what? Let's do that. How much money? See, I still say that it's foolish because the pros are like all-star, like it's an all-star team, right? When you're at a pro level. But how much money would go to Alabama to just cover? Like just keep the score within whatever they set this. I would love to see that game. You know, they used to play a NFL all-star, college all-star game like in the 50s and the 60s. Could you
Even in the
imagine?
70s.
Oh, was it in the 70s
Yeah,
too?
I remember watching them. They stopped them in the early 70s.
Can you imagine Gifford
That's pretty
and
cool.
like Nitschke smoking cigarettes on the sidelines of this thing going, all right, let's go kill some people. Be awesome.
my dad told me about that. He said they take the college all-stars and then they play, like a pro team or whatever. And he said, I can't remember the running back. He was a famous running back, I think in the 60s. And he said Dick Butkus was the middle lineman for college. He said by the end of the first half, that running back was looking for a place to hide. Dick Butkus to shut that guy down. He said it was the most unbelievable thing he'd ever seen. This college player just brutalizing one of the best running backs in the NFL.
Danny, I want to talk to you about, you remember when I told you Chernobyl was like the best television show ever?
Is it?
It was very good. I don't know about best ever, but it was very good.
Chernobyl was awesome, Hunter. Like that was like, well, I wanted more of it. Like, I want to know more of the story because it's true, right? But there's this thing on Netflix. I'm probably late to it. The Queen's Gambit.
It's fantastic.
Incredible,
Oh,
yeah. Me and Nicolette blew through it.
Yeah,
Fantastic.
that was so good. Danny, have you watched it?
No, but someone else told me about that the other. I think my sister from down under.
It's really well done. And then
Makes you want to play chess.
Not really, just enjoyed the story. And then there's another show. It's on Apple, and you can get the Apple TV app just like you can get Netflix on an Amazon device, so it doesn't matter your device. It's called Ted Lasso. Freaking awesome.
Oh, that's the Jason Sudeikis one, right?
It's so awesome. Like it's just a good.
He's a soccer coach in England. Is that right?
He coached. In America, he coached the Wichita State Shockers to the NCAA football championship, and then got hired by a British soccer team to coach their team. If you liked The Office, you'll love Ted Lasso. It's absolutely fantastic. Highest recommendation. 4 stars, 5 stars, 28,000 stars. Awesome. I would
Do
rank
any
it
of you,
above. Go ahead.
do you guys like Arrested Development? Have y'all ever watched that?
That it's a step below that. I mean, Ted
Me
Lasso's
and
a step.
Nicolette just started watching it. I think it's pretty funny. I like Jason Bateman a lot, though. I'm a big Ozark guy, so.
Lasso is better than Arrested Development for sure.
Is Lasso,
Ooh.
is that the guy from We're the Millers?
That I don't
Or
know, but I don't know Jason
I think he
Sudeikis.
was one of the guys in there, I think. You talking about Sudeikis?
I
Yeah.
think so, yeah.
So before we get into hedging,
Yes, that was
because
him. That's where they got in the SUV and pretended to go to Mexico as a family.
SUV, RV, whatever.
Yeah,
Same thing.
that was him.
it has a V in
Yeah,
it,
he's
Don.
funny.
We're okay.
That is a funny show. Movie.
It is.
So when I'm looking here at a chart of Bitcoin, like this is a marvel. Like we should just enjoy this. Like it doesn't happen often where you see just fantastic moves like this, or Tesla, right? Like Tesla is beautiful. Like this is absolutely something. It's a sight to behold. But the thing that's powerful about weeks like this and moves like Bitcoin and moves like Tesla is it gets you into it can get you into some bad habits and get you into chasing. And I don't think stock nerds and market lovers have that issue per se. I think everybody might fights the urge. But like cookies on the counter, man, you walk by them, you want a cookie, and you're like, I shouldn't have a cookie, you know, but you have a cookie, so you got to fight the urge. Like, how do you not chase in this situation? And there's nothing worse right now, and I have so much empathy for stock nerds and market lovers in this regard, or anyone who's in the markets. This has been a beautiful week in the markets. If you're long, this has been a gorgeous week. But they're not all like this, right? And it's the first week of the year. And Danny talks to all the people that ever call. Like if you call the office, you're going to get Danny. You're not going to get Hunter. You're not going to get me. You're not going to get Don. You're going to get Dan. And there are a group of folks that will call Danny inevitably that will always tell him, I'm waiting for the pullback. Or last year when the market ran so much, I'm going to wait till after the first. And then here, the first, trading week of the year comes. And you've had this. I mean, look at this move in the Nasdaq. I mean, you've just had this move in the Nasdaq up another % today, and all by the way, on the backdrop of unrest, a horrible jobs report. More people died of corona, more people getting corona, and it just doesn't make a bunch of sense to people. And we could spend the rest of the day, you, me, the fellas, theorizing as to why and what and how, but it doesn't help you make or save money. And so when Don will say, or Danny will say, or Hunter will say, hey, just pay attention to the charts, there's so much more that goes into just paying attention to the charts. We understand that, but is now the point in time where if you've been out of markets that you want to jump in. And so I want to examine that with you. Like, look, this movement Bitcoin is undeniable, right? Like, I mean, this is great. Don't begrudge it. Just, and I know a bunch of you do. You're like, it's not real. Look, I get it. I don't want to hear it, but you have a choice to either participate or not, or to look for consolidations or not. I don't own any Bitcoin. I wish I did. Just like I talked about in the video last time, I'm not participating in the Tesla move right now. It kind of bums me out, but I'm okay with letting go. And it's really kind of what I want to talk about. And like, well, where could you have gotten into this Bitcoin chart? Well, my trading plan, I'm trying to buy towards the mean. And when I say trying to, because there's no absolutes, there's always an exception to the rule. But look at this consolidation here in Bitcoin at 20, we'll just call that 23, 25. And then it makes another consolidation here. So there were opportunities, but are those high risk or low risk trades at that point trading at the 3 ATR? And look, we get a bunch of new people to our work. And what does that mean represent? So let's look at Bitcoin's average true range. It's almost $2,800. Bitcoin traverses $2,800 up or down every day. And so that, for some people, that kind of move is a little too much for you to handle mentally. And that's not bravado or anything. It's pretty volatile is what it's telling you. And so when you think about that, this is one $2,700 move, two $2,700 moves, three $2,700 moves. And so if you know that markets tend to pull back at certain percentages when they get extended over the 21, and the mean, by the way, represents the 21 if you look at the lower left-hand side of your chart. Is that the place that you want to start your position? Or if you had a little patience, and it's so freaking hard, and I think acknowledging that it's so incredibly hard is the first step in kind of overcoming chasing, because you've got 51 more weeks left in 2021 to do whatever it is that you want to do. I want to write that down, that little flash that just came up there, because I want to talk about UPS. You have 51 more weeks to do whatever it is that you want to do in the markets. And, you know, is this the high point for Bitcoin? I don't know. Should you short it? No, you should not short stocks that make new highs or ETFs that make new highs or currencies that are cryptotic. Danny, is cryptotic a word? That didn't feel like a word. Even I'm
Kryptonic?
I don't think so.
Maybe
No,
on a
okay.
Superman movie, but
nice. Yes, Krypton. So, well, Bitcoin is Peter Schiff's kryptonite or cryptocurrency. Little Peter Schiff hate there for you, which is easy to do, by the way. Like, don't be the person begrudging stocks or begrudging other people's joy in whatever they do, or don't argue with it. Like, it's just foolish. It's a waste of your time. Anyway, is this the place that you don't want to short? I want to make that point real clear. You don't want to short things at new high. Stocks, ETFs, indices, cryptocurrencies that consolidate at or near new highs tend to actually go higher. Now, I will tell you that, you know, oft times when you get to this third ATR, that's a really high probability zone for a pullback. But when you're in a momentum trade like this, it just keeps going. But you get up here, you came down to the mean, maybe that's where it should have been bought, you know, down at 20, down at 18. And now it's doubled from there. It's just crazy. And let me just tell you, we have been participating in the shop. Control, let me just erase all this real quick and get in here, GBTC. There you go. Which trades at a premium. Don, what's the premium of GBTC to Bitcoin?
Right now it is 21%.
Well, can you explain to people what that means? What the premium?
Yeah, each share of GBTC owns 0.00095 Bitcoins. So you just convert that Bitcoin price, multiply it by 0.00095, and it gives you what would be the equivalent which should be the equivalent GBTC price. And you just compare that to where GBTC actually is. So like right now, Bitcoin is at 41,300. Using the multiplier, GBTC should be trading at 39.24, but it's trading at 47.65. So it's a 21% premium. And the ETHE ETF works the same way for Ethereum.
And
Hey, I've got a quick question, and Don, you may not know the answer to it. I don't. Has there ever been a time when either GBTC or the Ethereum Trust has traded at a discount?
I don't think at a discount on GBTC, definitely not on Ethereum, because it's so new. There's a new ETF that came out, I don't know the ticker, recently that was trading at over 100% premium versus, and it's actually a basket of crypto, but it's 80% Bitcoin. It's probably closer to 90% Bitcoin now.
And the moment the SEC allows a genuine ETF to come into the space, that premium is going to go away, right?
It should, yeah.
It should. Why? What is the hesitation?
Let's back up. So the 100% premium at the very beginning, if it's just a newly issued ETF or ETN, they may try to prime the pump to get some volume in there to get people interested to buy it. Otherwise, it won't go. So you may have distortions in what the actual premium is for the first couple weeks or month. You can't really count on any of those numbers until you see a little bit of time on there. kind of like an IPO. It's just crap. You're just rolling the dice till you see what actually plays out after a few weeks or months with volume. Hunter, to your question, a premium or discount, it's not the same as a closed-end fund, but a closed-end fund has a certain number of shares. It's not a constantly new IPO like an ETF. And so those like the Sprott's Gold Fund, when gold is in favor and everybody wants gold, that'll trade at a premium and that premium will go up. When gold is out of favor, nobody wants it, that it can actually trade at a discount to the NAV, if you will. Those ETNs though, those currency ETNs, they're a promissory note. You don't really own the underlying. It's just a promissory note from the issuer to pay you the amount. But we'll have to see. The only way you'll know if it ever trades at a discount is when Bitcoin is really, really underperforming and it gets hammered. And you go back and look at it. So Don, you know, when Bitcoin sold off to about 3,000 a couple of years back, if you go back and look then, if it's not selling at a discount then it never has.
And so when you're looking at, well, when would you want to get in? Like what is, and I don't want to get like a disciplined investor, a disciplined trader, but I think you have to have some rules around your entries and exits. Can't deny the fact that you would make money if you got in any time in Tesla this week and you'd have made money in Bitcoin this week. But I think what you're after is consistency. I mean, I'm after, I want a consistent way to grow my account each and every week. And when the trade isn't working, I want to be able to realize when it's not just by price, but, oh, it broke my signaling or it broke my time allowance because I trade options. And I want to be able to get out of it. And so when I'm looking at this chart of the NASDAQ, and so NASDAQ's up 1% right here. And if I can just get rid of looking, I got the fellas cameras up. If you look at this big move and you look at how the NASDAQ just rode that third rail back in August of last year, and then it had that big swift decline down here in September, you finally hit the 1272 extension of that. And you can see how markets paused and in fact pulled back. And I point this out to you because moves in markets, moves in stocks tend to terminate at extensions. And the reason why that is it's algorithmic. The algorithms are set there. So when someone says a market's rigged or I don't get Fibonacci or why it could work, it's because the algorithms are set to those price levels. Just like today, like if I zoom in really closely to today, there was a point that does a horrible job of it. There was a point at 9:30. So here's the move from just high to low. If it's on a smaller time frame chart, you'd see it a little bit better. High to low from the other day. Was that Monday was a sell-off? And then, or to whatever day that was that Monday? And then that's the 1272 extension of that move. And you can see how price just magically paused there. And if I put this on a smaller time frame chart, say like a 15-minute chart, as you got near that extension, I know there's it looks like a lot of space there, just yeah, it's the algorithms. They're coming in and they're selling in front of you. And the whole market's driven like that. And so once you recognize that, it really helps you time your entries. There's going to be, and I'm not going to say it's bearish, it's going to be healthy for, that is not the chart. Is that the 15-minute chart? There's going to be a pullback eventually, or at the very least, a consolidation in a Bitcoin or XYZ stock, whatever it is that you're looking to get into. But having the patience to wait for your entry, and whatever your entry is, that's great. But most of the people I talk to, when I first meet them, if I say, well, what's your entry? Like, what's your favorite setup? They don't have an answer for that. And I can tell you what my favorite setup is. I know Don can tell you what his favorite setup is, and Danny and Hunter as well. And understanding what your setup is and what you trade best. If this is the pattern you trade best, have at it. But for me, I've made more money waiting for a pullback to the mean, a hold, a shoot through, something that centers around the mean, and then smaller time frame consolidations on 195-minute charts, 78-minute charts, and 30-minute charts, 39-minute charts. So this market is going to lure a bunch of people in. And so when I look at like I thought the Dow, I've said it all like leading up to the last year, the Dow was going to 31,000. Well, we're kind of there. And there's the 1618 of that move lower from September. That's a big extension. You're at +2 ATR. It doesn't mean that you can't, that's just, or I got to auto zoom this chart and try again here, but that doesn't mean that you can't go higher. The probabilities of a pullback from this level here are now increased significantly from maybe a +1 ATR and surely at the mean. So do you want to initiate your Dow position here? This is the Dow futures, or do you want to give it a little time, see if it wants to make this move back lower? I don't know, because it's a market and anything can happen. And so this month will test your patience, especially after a week like this week in certain stocks. Don, what you got?
Back to the GBTC, over the past 5 years, it did trade at a minor discount, 0.34% on March 20th, 2017. And within 2 months, it shot up to a premium of 132.6%. And that coincides with that big spike around that area. This year, it's peaked at around 41%, which was around the peak over the last year also.
So what about chasing? You got anything on chasing?
I think that what you show on that chart could be considered one of the weaknesses of using ATR charts. If you're always going to sell whenever something reaches a +3 ATR, you could miss out on something that's really going to be a big mover. And you almost have to know the personality of the instrument that you're trading. It's perfect if you're using broad ETFs that track the market because they don't stay extended for long periods of time like that. But when you get some really stocks that are just going to fly away to the upside, like Tesla, Bitcoin, SI, they're going to laugh at the +3 ATR.
And there's nothing wrong with just trailing up a stop. Like
Correct.
It doesn't have to be an automatic sell. It can absolutely be.
Yeah, nothing has to be all or nothing. Just take it off in pieces.
Yep.
When you're extended.
So, Hunter, you have anything to add there? I'm sorry.
No, I mean, I agree with Don and with you. I mean, another example is Plug over the last couple of days.
Oh my gosh,
I mean,
I'm glad you said that. Let's just give a moment of praise, Don, to two stocks that we have beat up really hard on this show. Plug, and we'll look at DDD here in a second, but go ahead, Hunter.
I was just, I mean,
it's the revenge
ATRs.
week.
Yep.
Yeah, it is.
What did you say, Hunter?
I was just saying, I mean, I don't know how far they are out of that third ATR, but I mean, if you sold yet, then, you missed out on another 10 or 15% today. But at the same time, I mean, this thing is massively extended. It's had an incredible week with a handful of headlines that were really positive for it. So,
yeah,
but I mean, this is relatively rare too. I mean, those are big gap up days, 3 in a row.
And by the way, there are some they're investors. They've just been buying Plug. There are a ton of new millionaires out there. People that have never sold a share of Tesla, people that have acquired Bitcoins at ridiculous prices. And so kudos to them. You cheer that on, you want people to be successful, but we beat up Plug so much. And just when it was a $3 stock because it could never get traction. And then last year it went from 3 to where it's at right now. And now DDD, and I don't know the news on DDD, what happened yesterday, but yesterday.
I think, earnings related, if I'm not mistaken, something about revenue.
They raised revenues, yeah.
Oh, yeah. I mean, and whether it's a short squeeze, it doesn't matter. By the way, that's why shorting's so hard, man. There's this story, if you Google it, of a fella that was short Green Mountain Coffee Roasters. And I've told this story before, GMCR. Let me see if I can still pull it up. He was short Green Mountain, and it was going swimmingly until it went from 50 to 90 on the buyout from from Dr. Pepper. And then he had to have then he put up a GoFundMe because he was short the shares. And you actually owe your broker doesn't just forgive you for that sin. You owe that money. Like that's why you should, if I short, I typically will sell a call credit spread, or I'll just buy the puts. This dude was short the stock. And when it goes against you like that, a lot of GoFundMes start popping up. Dan, you want to explain how that?
The broker lends your own money. They lend you a portion of your own account. So, but it could have blown up his own account. It could have dragged.
Oh, it blew up his own
account. So he's trying to get the money back that he lost himself and get people to pony up his losses.
Well, yeah, because nothing is the worst feeling in the world. Well, there are other worse feelings, but in the account world, where you open up your personal account and there's a minus sign in there, you owe your broker money. And he was short so much of this at $40, a share.
Yeah. Well, my question is, did the GoFundMe work? Because if so, he might be smarter than we think.
I don't
you
know
can get people to
or
pay
not.
the losses.
Yeah, I know, right? Hey, I've got this issue. Maybe you can come help me out. I didn't know how it worked. Most people don't reward that kind of behavior. So look, if you're of the mindset that,
do you want to mention something on Plug real quick? It should get some sort of a lifetime achievement award for being in business for 21 years and never having made a penny in earnings. And even with this run, it traded at a reverse split adjusted 1565 in January of 2000. It's now at 53. So it's still only like
this year
over 90% off its highs.
Man, yeah.
But they kept plugging along.
By the way, when in all fairness, when we were beating it up, I actually had a guy call that was interested because he was, and he may be a millionaire now, Tim, if he held it.
Yeah.
He was all in. He was buying the story, but they had a couple lawsuits out. It was some shareholder stuff, and he was trying to find out how to get them to be how to find out the numbers on the exchange and whether there was manipulation, all kinds of stuff. And that's when we talked, when on the show we were talking about how even though what a penny stock was like a $3 stock, how low price stocks and penny stocks are just ripe to be manipulated. Doesn't mean you can't make a lot of money on them. It just means that there's a lot more risk and a lot more manipulation going on, and because you can move those. Some unethical guy that's got $30-40 million can really move a penny stock. You can, or a $2 stock. You can't move Apple.
No, takes a lot to move. Takes a lot to move the old Apple. Let's do this. So
which story was he buying? The 1999 story, the 2003 story, the 2007 story, the 2010 story, 13, 14, 15? Which story was he buying?
It was about 4 years ago when I've still got him in one of my files.
All right, well, that's fine. I'm just wondering if he's a holder from 1565 back in
I'll have
2000.
to check that, but this was about 4 years ago. He was asking me how to do some forensic research on the market data. And he reached out to me, but I know I can't say his name on the show, obviously. I remember him because he's got a unique name. So I know who it is. I'll go reach out and I'll find out how long he's done this. But he was really loving the story on their batteries.
And you hope he is. Like, you hope he's benefit. Like, he's like, okay, I'm buying, and you just want people to be successful.
I hope so too, because he was all in. He had too much. He and his dad both had too much tied up in this one stock.
So I am of the mindset, and I think we are due for a pullback. Now, whether we get one next week, we're going to have a pullback. And so I want to explore what's the best way to take advantage of that. When I say pullback, it doesn't have to be, a sell-off or some disastrous event. So many of you on the other side of this microphone associate the pullbacks with like the market aligning with your economic assessment of the world. And that's dangerous. The market, I often ask people to stop looking for alignment of your beliefs and your value systems and the markets, because you're looking for, at that point in time, you're looking for congruency. You're looking for alignment, and that typically doesn't exist. Now, often, sometimes you know, you hear there's a pandemic and the market sells off faster than it's ever sold off. That makes sense, right? But what might not have made sense to you is what Jay Powell did, the historic measures of the Treasury Secretary. Like, there's so much liquidity out there and the money supply continues to grow that you've got nowhere else to go with interest rates at trading at these historic lows. The moment that ends, though, by the way, I do think we'll have severe repercussions to the market, but that's not here nor there right now. What is going to happen at some point, and again, you don't know when, the market eventually will come back to this SPX weekly chart to the mean, and that's got to hold. And so when someone will ask me, like, here's another period in time comes back, that's 2018, that big sell-off in 2018 when they tried to raise interest rates. You see how the market took that news. Okay, we're not going to raise interest rates. We're going to come back, test the mean. We have a pandemic. Okay, good stuff. But look how extended we are off this rising 21. There's going to be a moment in time where we come back to the 21. And so what's the difference? Because I believe that the pullback, until proven otherwise, is to be bought. And so if I'm looking at, say, the SPX on a daily chart, I'll change this to a daily chart. So if I'm looking for the SPX to come back to somewhere, maybe to the 21. So there's the SPX. There would be the mean. What's the difference between a pullback and a sell-off? And because everybody says, I'll buy the pullback, or just like they tell Danny, I'm going to wait to this period in time and then I'll get into the markets. Okay, well, when the pullback happens, it scares the bejesus out of people, doesn't it, Danny? How many times do people call you and going, you know, I think I'm going to just wait and to see how this all fares out, and then before you know it, on November 4th or November 9th happens and the market just shoots up higher without you. And so what's the difference between a pullback?
Human nature. It's human nature. It's
human nature. So the difference between a pullback and a sell-off. Pullbacks hold the 21. Okay, pullbacks hold the 21. Well, what about the 50? Because Don will tell you about the 50, and I'll let Don here speak for himself in just a moment. But when I look at the 50, you can sell off all the way to the 50. The 21, though, and the 50 is my charts freeze on me. There we go. Have to hold. That's the difference between a pullback and a sell-off. If you pull back to the 21 and don't hold, to me, now you have a great chance. It's just gates and fences. Like this fence held, and now we're going higher. But if this fence were to open up and let all the herd, you know, come down to the 50, selling off from 38.24 to 36.18, you're like, Tim, that's only 200 points. You're gonna feel that sell-off so much deeper in growth stocks, the things that have run. It's going to feel like like the world is, I don't know about the world ending, but it's going to feel bad. And that gate needs to hold, because you're going to then traverse down here somewhere. And this is where the ATR charts really come into play, because there's a big gulf between the 50 and the 200. So it's probably a really good time to dust off Don's hedge and hold them, or sell them off playbook. And I think let's take, Don, where do you want to start? Hedge them? You want to start with hedging? And do you want to start with UVXY and why it's the worst product ever created? What do you want to do?
Yeah. The VIX products, and a lot of this is from experience. They sound fantastic. They don't work in reality the way they're supposed to, because as you're looking for something, they do have violent spikes up, but they're difficult to time and they don't persist. Tim's showing you a chart of something that just always goes lower. And you can't, if you're looking to hedge, you can't be certain that the hedge that you're buying is going to act the inverse of what you're trying to hedge. On the other hand, inverse ETFs that go against the major indexes absolutely do work the inverse of what you're trying to hedge. Sector ETFs, same situation. UVXY is a widowmaker. I'm sure there's people out there that are laughing right now thinking that they're smarter than we are and have done well with it. But I would think that if they totaled up all of their UVXY trades, they might be remembering the one that they made a big gain on and forgetting the 49 that they lost money on.
And I want to show just a chart of the cash VIX, the people's VIX, the VIX that I make fun of because nobody knows how to use it, because is this 40 level too high? is just back in November, is 21 too low? What if it gets down to 15 again? And look, I put these are just standard Bollinger Bands. And this is what I know about the cash VIX, that when you start trading 2 days, 3 days, 4 days up around the upper Bollinger Band, the great chance of the market price correcting itself higher and VIX coming off increases dramatically. That's why I use these Bollinger Bands. And you can see what the VIX does here. 2 or 3 days up at the upper level, and now the last 2 days the VIX is corrected back. And look, the VIX can absolutely, the Bollinger Bands can expand, and this VIX can still go lower. And if the VIX goes lower, this is why I started talking about algorithms in the beginning of the show. This is algorithmic trading at its best. Doesn't mean I agree with it. It just means that VIX lower, buy indexes. VIX lower, buy SPY, buy Qs. And Don, what just got added to the S&P 500 index in December?
Tesla.
So when you have algorithms trained to buy the indices on certain triggers, and one of the world's most popular stocks just got added to said indice, it's the 10th biggest position in the indice. What do you think's going to happen? It's going to be the same in reverse when the selling starts. Don't misunderstand me. But if you are a contrarian, I think the word contrarian is so abused. If you're a contrarian sitting on your hands waiting for your market to get short, or you're waiting for the dip to buy, kudos to you. But if you're a contrarian fighting this market, continuously shorting a market that is just ripped the soul out of bears, man, that's disaster. And so that's fighting the wrong fight, if you ask me. And so these VIX products, they just don't. I mean, Don, we had a storming of the capital, and the VIX just goes lower, and people will argue, well, the markets are broken. This is a big disconnect. Say what you want, but if you're the person that says, this is not me accusing, I'm not accusing Don, I'm just talking with Don. Like if the person on the other end of the microphone says price is truth, well, this is the truth about where the markets are, right? And so what do you do? Don, that was actually me throwing it to you.
I mean, I got nothing else to add to that.
Okay.
It's, trade it if you want to. I have really not had the success with it that I anticipated years back when I wanted to trade it. It just doesn't. And the thing is that the UVXY and the VXX are made up of a combination of the front 2 month contracts, and the percentage of them varies daily. So the one contract could be doing something while the other contract could be doing the opposite, and that's going to impact what the VIX or the UVXY does, and they can move opposite of what the actual VIX itself is doing.
So just to summarize, Don, the playbook, because you did the class in January of 2020, and then about a month later, the market started to sell off. So let's say we do start to get the pullback. All right, let's walk through the steps of what you're going to do. You got a full portfolio right now. What are the first things DV is going to do?
Well, we're always looking at what the leading stocks are doing, and leading stocks tend to trend higher along their 21-day exponential moving average. So if I'm in a leader and it's above there, I want to have as big a position as I'm comfortable with, as long as it's above the 21. If we start going sideways while other sectors in the market that were considered non-leadership start getting money flows into them, you're going to see a decline in relative strength in these leaders, and you're going to see them start breaking below the 21. So that's why we, starting with the second to the last week in December, started getting some stops hit in some of the leaders, and the market took us out. We weren't arguing with the market. We were just following what the leaders were doing. And this weakness wasn't necessarily showing up in the indexes themselves, because the leading stocks themselves don't dominate the percentage of the indexes. But it was a change in character for the leaders, and that took us out to where we were a little over 50% invested going into the Georgia election on Tuesday. The reaction to that, and then the Capitol being invaded, I talked in the video, we put a hedge on. That hedge plain and simple hadn't worked. But what the hedge does, you can't always look at it in a vacuum, because if you put a hedge on, it could keep you from getting shaken out of something that you might normally have sold off in the first place, that really didn't need to be sold, and then you turn around and it's up 6% the next day because it was just a reaction to the overall weakness in the market. So just because you lose money on a hedge, the fact that it allows you to maintain other positions in your portfolio while just smoothing your equity curve, that's really what we're kind of all about here with this. It's a flow like water, bend like a tree in the breeze, however you want to, whatever metaphor you want to use. But we're not looking for violent spikes. We're looking to smooth the equity curve for our clients. We don't want a day where we're plus 6% and the next day we're down 4%. We'll take a +3 and a -1.5 over that anytime, because net they're the same. We just want to put the odds in our favor, and we recognize when something has a change in character. When it does, we act on it.
One thing I'd like to jump on that with regard to the hedge, because people don't, I want to make them understand, because you were talking about it, you may not have to sell something that you like by throwing off the hedge. Actually, you may not have to sell 8 things you like that you've had. So you've accumulated 6, 8, 10 very good leading stocks that move, have a higher beta than the market, and that's why they're leading stocks. And so rather than having to unwind 5 or 6 positions, or 7 or even 8, and then having to find that key entry point again, you can throw on a 10% NASDAQ hedge that's a double and neutralize 20% of the portfolio, not perfectly, but very close. And that allows you to hold multiple positions for a few more days, just to see if this is indeed just a bounce, or if it actually is going to be the next correction. And if it is, then you start lightening up on those stocks, and the hedge actually makes you money, which was really not the intent in the first place. By definition, a hedge is a hedge. It's to take the portfolio flat. It's not to make money.
The last time we were, I believe the last time we were genuinely short the market was late February, like February 24th timeframe, when we started selling off things in the market. And I don't think gold's a hedge. And like Don alluded to the inverse ETFs as his preferred trading vehicle to hedge with. Like gold's, here's a daily chart of gold back down to the 200-day for a revisit here. Like that's, I don't think gold's your hedge. I think the inverse ETFs get you to where you want to be, and then you can always get back in is a phrase I like to say, but there is a psychological aspect, and I want to address that with Don. Like, Don, give me a stock that you would prefer not to sell if you didn't have to sell it. Pick anything.
PD.
Oh, there we go. Let's type that in there.
And this is part of understanding where a stock is in its life cycle. And the reason I bought this on that big yellow candle where it gapped up out on earnings, and added to it twice that same day. And it's just recognizing the behavior of leading stocks. And when this was a stage 1 breakout. Those are stage 1 high volume breakouts, so it should be treated like gold if you're a growth investor. So initial position was small, added another bit to it, the first day, and now added more to it this morning. It broke the 21, but this was one that I really, normally if I had a very small gain in something and it broke to 21, I would blow it out. The fact that this was a first stage base led me to hold it a little longer. You can see the blue line, the 34 there, serving as support, and it bounced very nicely off of that. So that's the situation where I survived a shakeout. The story's new, the stock's new, it's in a growing industry, and it's a first stage high volume breakout. And I want to give this every opportunity to work.
So this is where you could use a QID. Is it QID, Don? Is the double?
QID is inverse ETF, yeah, and then SQQQ is the triple.
Yep. You could hedge this. You're like, okay, I like this position. It's holding the 34. It you make the determination as a trader and investor if you want to hold it to the 50, but you know that leading stocks, they gotta hold some of these fences here. These are the two big ones, the 21 and the 50. And so if you put a hedge on, like Danny was saying, it's not that you're looking to make, you're just looking to keep. And is this a couple day shakeout of the indices, which, at the moment, that's what the NQ is signaling, right? Or is it going to, right down here, or is it going to be something greater? And then the hedge lets you ease out gracefully of the stocks that the market's telling you got to get out. So,
and that as far with inverse in the doing the inverse of the Qs, we hold as core positions Amazon, Apple, Microsoft, Netflix, Nvidia, big NASDAQ 100 type stocks, and the hedge works very well with them. And we can give them room to under the 50-day moving average sometime, and the hedge will just offset whatever losses there are with that. So you calculate what percentage of your portfolio is represented by those big NASDAQ stocks. You can offset, because those things bounce back very quickly when the market rights itself. They sell off sometimes and get overcorrected, but money, when it needs to be put to work, you can easily put it to work in these big NASDAQ type stocks. So it's easy to hedge them and then just take the hedge off. And if you want to hedge more of the portfolio, go a little bit bigger than whatever percentage of these big NASDAQ stocks are of your portfolio.
So with that, look, is this the place you want to be super aggressive with the market? For me to give you my opinion, I don't think that's helpful. I know you can make a tremendous amount of money trading the mean to 1 or 2 ATRs and a bunch of things, and then wait for your setup, trail at the stop if you got something running on yourself. But let's talk ideas, and I want to throw it to Hunter, because I promised in 2021 that I'd give more time to Hunter and his research, because I think people enjoy it. But before we do that, I think this is the time that we always remind Hunter that the Buffalo Bills are in the playoffs, and their game is at 1 o'clock Eastern on Saturday. And Mark from Buffalo says hello.
Well, I personally think Josh Allen will maybe have an MVP kind of day. I think the Colts are really good, though. I have a good friend who's a huge Colts fan, so we were having a nice debate last night. But I'm rooting for the Bills just so Mark from Buffalo can experience some joy, because I know that the Bills fans have been robbed from that for a long time. So.
Well, with the Colts, and when the Colts get Carson Wentz, poor Phillip Rivers, man, Phillip Rivers will be yelling on the field tomorrow at everybody, and then he'll have to go 90 yards with like 32 seconds left. And
speaking of Carson Wentz, Dan, you were having lunch with somebody this week that supposedly is really into pro sports contracts, and you were going to ask him if the Eagles could get rid of Carson Wentz's contract easily. Did you have that conversation?
Yes, I did. Yes, I did.
What did they say?
No, he said there's no. He goes, because nobody's going to take it.
Well, that's what the Jags thought about Nick Foles last year, and
the Bears
we got lucky.
Hey, and Bears are in the playoffs. Every team that gets Nick Foles, except the Jags, gets to the playoffs or a Super Bowl.
We get Trevor Lawrence, though. Our savior is coming.
He did say, so what do you do then if you like Jalen Moore? He goes, well, they're in a tough spot because you got egos going, and who do you bench? Who do you sit down? Because they're in a tough spot.
I still say the Eagles trade Jalen, pick up a ton of picks.
Not a chance. You got to be saying that just to stir the pot. You don't really believe that.
He has the Carson Wentz cards. He
said that's a very.
There is no way the Eagles will trade Jalen Wentz or Jalen Hurts. No way.
This was the plan all along.
Here's what he said. Look, this guy's in sports. He talks to these guys. He said, look, I understand you can play Jalen, let him play, and let Jason Wentz sit on the sideline as a second stringer.
Or Carson Wentz. You've called Jalen Hurts, Jalen Moore, and Carson Wentz.
Carson Wentz, he said, but every time as the owner, you're writing that $2 million check a month, and you're sitting on the sideline. He goes, it just kind of hurts. It just
they will eat enough of the contract to get the Colts to take them. Is my prediction.
I think the Colts take Alabama's quarterback in the draft and do not trade for Carson Wentz. That's my personal opinion, and I would
Yeah,
like to see it happen.
and you're completely unbiased about Alabama quality of players coming
Exactly.
out. Yeah.
That's right.
The Patriots make a play for Carson Wentz, and he goes on to win 10 more Super. He's the next Brady.
Oh, please.
Is Alabama's
you're swinging
quarterback
the false
considered
hope.
an NFL prospect? Is he
Oh, yeah.
a legit
He's,
NFL prospect?
Yeah, he finished third in Heisman voting. They're projecting him like
That doesn't mean
middle
anything.
first round.
That
They're
doesn't-
they're
When is the
projecting.
last?
Middle
Who's the
first
last-
round? Really?
Well, he almost broke Joe Burrow's completion percentage record. He threw for like 4,000 yards and like 36 touchdowns and 4 picks. So he's just accurate and smart, which that usually translates to the NFL pretty well.
This is going to sound
I think he'll be a good
ridiculous,
NFL. Listen, Tim. I'm going to make a big call here. I think Mac Jones may be a better NFL quarterback than either Jalen or Tua Tagovailoa. So I'm betting on Mac Jones maybe being the best of the three, which would be mind blowing because they were all in the same QB room, along with Jerry Jeudy, Ruggs,
That's
Devontae
interesting.
Smith.
I don't
interesting
think he'll
team.
be better than Hurts. I'm pretty impressed with Hurts. I think that the Dolphins made a big mistake with Tua.
Yeah, I'm scared about the way that Tua played, but I also want to give him a chance next year maybe to see if he can. It didn't look good to me. The offense looked all
He's
over
a
the
dink and
place.
dunker. He has not thrown the ball down the field.
But it reminds me of Drew Brees kind of in his later years, just kind of check down, slant route, out route. They're just not letting him open up the field or throw it down the field very much. And I wish he would.
The best quarterbacks, though, weren't top 5 picks. Like, who are the best quarterbacks? It's Brady. Who's the guy? Aaron Rodgers.
Allen would be top 5.
All right, let's go back to stocks. It's in the sports show.
Listen,
But
you're
he-
cranberry shirt. This is
come
what the
back
people.
on.
Yeah, we'll get nasty emails if we stay on this for too long.
Yeah.
When we transition to Hunter, we talk sports gambling. Damn it, which we haven't done.
Now we're done. Stocks, Hunter. Where are the sectors? Where are the stocks?
Hold on.
Alrighty.
Go ahead,
Oh.
Hunter. Go ahead.
Good.
I
All right,
think
so-
so. Danny gets antsy when he starts making name mistakes and he realizes that he doesn't know any players in the NFL.
I just don't want to go down a rabbit hole.
He knows Jason Wentz and Jalen Moore.
Now, let's move on. Stocks, sectors.
All right.
Since Dak
Tim,
got hurt, sports has been off limits for Dan.
Yeah, maybe next year when he comes back, we can talk about the boys, and they're probably 6-10 year next year.
Oh, is that why you're hurt, Danny? Are you butthurt that Ezekiel Elliott isn't very good, or what's wrong, Danny, with you? Let's talk.
Nothing.
You hurt?
I'm so busy. I'm not really watching much football anyway.
That sounds like a hurt soul.
Look, I'm
Danny.
already not worried about the Cowboys.
Look at how Don handles the Jags with grace.
From the outside, we don't know what's going
Yeah.
on.
Look, it's pathetic.
Accurate.
All 3 of our teams suck. The Eagles are as bad as the Cowboys.
That's great. Good.
Jaguars.
Oh, go ahead, Hunter. Tell us all the stocks going up on Monday and all the ones going down. Don't do any other stocks. I don't want
Okay.
any of the in between. Just give me the up and down, please.
I will try my best. First thing, pull up PBW, please, Tim.
Sure.
This is, and let me pull it up myself really quickly. This is the Invesco Clean Energy ETF. And I actually sent the guys a screenshot comparison a few days ago of PBW, QCLN, and TAN, which we'll get to those in a second.
Okay.
TAN has been the best performer since COVID lows. On March 23rd, PBW second, and QCLN third. And so I just wanted to cover these because these 3 ETFs have had really strong moves on really nice volume pretty much this week, and obviously going back even to the second half of last year had really good moves. So I just would like to clarify, PBW has all kinds of exposure to various areas of renewable energy, electric vehicles, and solar, whereas TAN is strictly solar. But with that being said, TAN has outperformed PBW by about 40% over the last 10 months. So just for future reference, if the ESG the electric vehicles, the hydrogen fuel systems, the solar energy, the renewable energy, whatever it may be, is really going to be a leader, these ETFs are a good way to play it. They're a lot more diversified. I mean, like, for example, I know Plug is a core holding in PBW and QCLN, Blink, NEO, Enphase, a lot of these, bigger, more strong names are components of these. So I know that they're really extended here. But if we do get a pullback, I would keep an eye on PBW and TAN. QCLN has been a laggard compared to PBW. They do have a little bit different holdings. But I just wanted to bring this up because I know people are seeing the solar move, seeing electric vehicles, seeing Plug and renewable energy and that kind of thing. Just, I would keep an eye on these. If the market does pull back and you get a reasonable entry, it might be something worth looking at. And while we're on the topic, will you just pull up Plug real quick?
Of course.
The actual chart. I know we talked about it for a pretty good bit, but just to kind of give you some insight into what's driving this move. First of all, Biden being elected and the Democrats with their Senate seats, that was part of it, at least at the initial part of this move. Secondly, the California governor has a stimulus plan that includes, I think, $1.5 billion for boosting hydrogen and electric vehicle infrastructure. And then not long after that, a South Korean company or investment company came out and said they were going to invest $1.5 billion in Plug. So they've kind of had a string of positive news-driven events over the last week, really, that has made this thing move like a monster. But, for what it's worth, maybe that's the market telling you that this is a leader in the hydrogen fuel cell space, if that space is really going to gain some footing and be a legitimate area. Secondly, Tim, will you pull up Run? This is one of the leaders in the solar space, but specifically over the last 4 or 5 days, they have closed at the top of their range and held up better than other solar names. And today, if you look at Run, they're holding up better than most of the other solar names. There's a handful that are down today, but yet Run is up 5%, trading at the top of their range. So for what it's worth, it's behaving like a leader right now. Will it continue? I don't know, but I just wanted to point out that this is acting like the leader in the solar space. The other one is Array. We've covered it a number of times. ARRY. Also acting like a leader, holding up better compared to their peers. So I just want to give you guys a little bit of insight into those ETFs and then some of the leaders within those ETFs and those spaces that are acting well. Next, I've got a little bit of the maybe unorthodox or out of the spotlight kind of moves with some sectors. Tim, will you pull up SLX, it's a steel ETF?
Mhm.
This thing has had a very nice move, and it showed up in some of my analysis in regards to the velocity of the move, especially right here, I guess about 6 days ago when it started moving off of the 8-day. Just a strange kind of occurrence. Steel is really having a strong move. You can see they moved up from pretty much around 31 all the way up to 46, consolidated a little bit, got relatively close to 21, and then the last 5 or 6 days they've had a nice move off of it. And I talked with Don about this prior. This is a it's a thinly traded ETF. So if you wanted to play the space a little bit broader, pull up XME, please. It's the metals and mining ETF. The move looks relatively similar to what SLX has done. Had a nice move up, consolidate a little bit right to the 21, and then over the last 6 or 7 days, they've moved off of it very well. So just a different way to play it. Steel is what stuck out in regards to the strength, but like we said, it's thin. So XME may be a safer or better way to play that. And the last thing, will you pull up XOP, please, Tim?
You're going to make a lot of people happy here in Texas with this.
Well, I noticed it obviously on this big move up from pretty much 38 to 64, kind of to I guess that would be right around the end of October to beginning of December. They consolidated, volume tapered off, and then lo and behold, the last 4 or 5 days, they have bounced off of that 21 and ran up from about, I guess, 58 to 65. And OIH is another one, and it pretty much looks identical. So this is one that was a leader. That big run from, I guess, 10:30 all the way to 12:10. They were really strong in that time frame, and they've consolidated nicely right on the 21, and here they are today. That are, they've taken off. They're down a little bit today on lighter volume, but I just wanted to point out there's other areas of the market that aren't Tesla, that aren't solar or electric vehicle or renewable energy that are acting well, and showing some strength relative to the market. So that's pretty
What's
much
your
all I've
favorite
got
stock?
today. What'd you say,
Tell me
Tim?
your favorite. What's your favorite stock in the whole wide world? You were just telling me about it before we started the show.
DraftKings is my favorite.
Okay. Why do you like it? Why do you like it so much?
There's a number of reasons that I like it. I think the perception on sports betting is rapidly changing. There's obviously new markets coming in, with states legalizing it that didn't previously. And I think, personally, I think it's fun, in regards to the service that they offer. And it's different than really anything that you've ever had before in regards to fantasy football. But, and I was telling you this, and this is strictly just my personal opinion.
That's why I
In
want
the
to hear it.
fourth,
Yeah.
in the fourth quarter of 2020, you had semifinals and World Series for MLB. You had the NBA Finals, you had the heart of college football, the heart of NFL, and you get the NBA starting back on Christmas. And so I'm interested to see what happens, because I don't know if we'll ever see a quarter like that that's got that much sports jam packed into it, as well as people being stuck at home and not being able to go to games and watching it on TV. So I think it's a unique time, and it's because of COVID, that we have that. And I'm interested to see what it looks like in regards to their earnings, whenever they do post them, and how the stock behaves moving forward this year. So,
What makes this, in your opinion, better than Penn? Or maybe it's not better than Penn. It's like a Penn.
well, from my own fundamental analysis, I like their balance sheet and their financial statements more than Penn. And they don't have physical casinos. DraftKings has little to no debt. Um, Penn has the Barstool effect, and you can look at the chart and see what the value in that is. Dave Portnoy, I think, is the real deal. But it's yet to be seen how will the Barstool effect generate revenue, generate profitability, all of that good stuff. So I personally, I like both a lot. I just lean more towards DraftKings. I've never used a Penn product, if that makes sense. I've never been to a Penn casino. We can't legally use the Penn, or the Barstool Sportsbook here, but I'm very familiar with DraftKings service and product. So that's part of it. But anyways, there's my little synopsis there. Anyway.
Good stuff. Here's what we're going to do. I'm going to give a quick update here. Danny, I'm going to have you give us the close, and then, you know what? Let's do this. Danny, give us the close now. I'll have Don give a preview of the 21 over 21, and then I've got one last note for StockNerds. So let's have it, Danny.
Folks, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. They can go up there to the subscribe button right in the middle, at the top, and they can put in their email. They'll get this podcast delivered every weekend, and our daily market insight, short 5-10 minute market video every evening that the market is open. We won't spam them. We won't bother them. It's up to the person to contact us if they're interested. You can also email me with any questions at dan@revereasset.com, Don at Revere Asset, Tim at Revere Asset, or Hunter at Revere Asset. You can always call us old school at 855 Real Wealth.
All right, Don, just a preview of the 21 over 21, please.
Before I do that, I want to say real quickly, one of the first stocks that Hunter talked about when he started joining the show was Darling Ingredients in the agricultural ops space. And we had a client that listens to our podcasts buy it off of his recommendation and discussing it, and it transferred it in. They actually stopped doing it themselves and became a Revere client, and it came in with a 40% gain on it. So,
Hey,
good for you, Hunter.
hey, man. And
Girl.
And that's the type of research that that we're benefiting from, is unearthing those types of moves in somewhat obscure industry groups that we don't normally
Don,
traffic in.
if I may, just quickly on Darling, that is also an ESG type of play. They're doing good for the economy, and I mean for the environment in regards to waste recycling for bakery stuff and that kind of thing. So it's kind of a backdoor play on ESG type stuff.
Good point.
Yep.
21 over 21, 2 additions this week that I'll talk about when I do the video later today are Roku, R-O-K-U, which we bought in-house, and Lulu, which is on the watch list. Lulu has been consolidating for a while. They've got a big expansion into Europe and Asia underway, as well as menswear. My kid came home from Christmas break wearing Lulu sweatpants. He said they're the most comfortable things he's ever put on. So I think Danny's wearing them right now.
I am. Makes me feel very comfortable.
They have their ABC trousers, which are so like they're not dress pants, but I don't know if those are the pants you're talking about, Don, but they're the A stands for anti, the B stands for ball, and the C stands for crushing.
That's important.
No, it's extremely important. So they are the top seller at Lulu for men, the ABC pants. That's not hyperbole. Yep. Did I just kill your segment? I didn't mean to. Like,
no, I think it's pronounced hyperbole, isn't it? I saw somebody on TV pronounce it hyperbole once, and that's always stuck with me.
Oh, well, you mean for hyperbole?
Yeah.
Oh, I got you. Yeah.
And that's just one more reason why English is such a difficult language to learn if you're transitioning from Spanish or French.
Or from England to here.
By the
Take
way,
your brolly on the left.
Speaking of Lulu, my daughter's a huge Lululemon fan, but she's found this competition, this new, tights or whatever you want to call them, spandex, and they're supposed to be uber comfortable, and they're called outdoor calling or outdoor voice or outdoor. Do you know what I'm talking about, Hunter?
I've never heard of that.
There's a celebrity that's pimping those. I'm not sure who she is. I can't remember who she was.
She got a pair from my wife, and she just loves them.
All I know, there was many Lululemon gifts at my girlfriend's family Christmas. Mom, sister, Nicolette, her brother's girlfriend, all were getting Lululemon attire. So apparently it's worth the money. I've never actually owned a pair, Don. I don't have any Lululemon sweatpants. Maybe I'll have to get some insight from your son. But apparently they're nice. I mean, there was a lot of Lulu gifts this Christmas.
Was that it, Don? Save it for the video. Okay.
Yep.
So StockNerds, market lovers, real quickly. You can get a hold of any of us real quickly on Twitter. I got a 5 at 5 update here for you. Just go to I'm at TJ Razor, and then I got a message in there right now. So if you follow me on Twitter, I'll follow you back, and then we can message like we're texting buddies. Danny is at one Danny Stewart, same thing with Danny, and then Don is D Vandenborg. You can follow Don, and he'll get right back to you as well. It's the easiest way to get a hold of us. Email fills up. Danny's inbox fills up. Mine fills up. I don't know about Hunter and Don, but Twitter is so much easier than email for us. And then if you want Don's 21 over 21 video, right here, it'll be Daily Market Insight. Look for it maybe somewhere after 5 o'clock or 6 o'clock Central. You'll find it there. You'll find the podcast if you're listening to the podcast. But if you're listening to this on a Saturday or later, and you're like, gosh, I wish I got the podcast earlier, you'll find it parked in Daily Market Insight shortly after 5 o'clock Central. That's typically when I'm able to get it up there. And then speaking of Daily Market Insight, so 5 at 5 list have been updating with StockNerds Market Lovers. Added, what did we add yesterday to it? Pins and CRSR. So I'll update the spreadsheet. But if you want to see a complete update of the list, All you have to do is click on this video right here, is Bitcoin a short, and you will get the complete rundown on everything. And so I think that's it. Danny, take us out and give us your last words of wisdom. Anything, sports, Lululemon, I want to hear it.
I got a good one. If it happens to snow in Dallas, stay inside. Don't go out and drive, because
Wintry
people in
mix on
Texas
Sunday.
cannot drive on ice unless they're from the Panhandle.
Love it.
Anything below the Panhandle, it gets scary whenever it gets icy. Folks, be safe. We'll talk to you next week on Your Money.